All right, welcome to the Futures Initiative Trading Recap. Tonight we have a special guest, AJ. Also joining us, we have Lima and Dubster, as always, followed by H. And we have another special guest with us, relatively new, Jay. So, guys, thank you all for coming in tonight. It's great to see everyone here for the trading recap. Price action was all over the place today. I unfortunately was not able to be at my desk to take well thought out trades, but I'm eager to hear how y'all's trades went today. So, without further ado, H, take it away.
All right, so today I forward tested this, I guess you would say. I didn't take this trade on an account because the only account I have, I passed. So I'm just waiting for that to get all sorted out. Um, I also didn't really want to trade today as well. It kind of worked out because we had news around the time my trade would have been happening, and I'm trying to work on consistency, so I'm trying to stay away from news trading. But it was great information I got today because I've never really back tested or actually traded this setup during news. So I got some good information on that. But mainly I've talked about this strategy for the past couple of recaps. But I'll start out. I have a time frame of what I want to see, which starts at 12 to 1 o'clock. So these two lines right here are the time frame that I look for a setup. Um, I look for the highs and lows in time frame. So as we can see, the time started right here at 12, and we came up, we created a high, and never created a higher high in this time zone. So or time frame. I would mark this out as my lunchtime high. And then down here, we came down in the time frame, we created a low and didn't create a lower low after that. So I would mark this out as my lunchtime low. And after I have my lunchtime high and my lunchtime low, and it's after 1 o'clock, I would look for an entry. So as we can see, after 1 o'clock, we came up and we swept this lunchtime high, and this is where I would look for shorts. So we took out the buy side from lunch. So now I would be looking for sell stops to get hit, and we come down. So once we break or sweep a high or a low, I would drop down to the 1 minute and I would look for fair value gaps, inverse fair value gaps, anything that I would usually enter off of because price would usually want to come back to those types of things. Um, but I did mark out this inverse fair value gap that I really liked. We created it breaking through the high, and then we just kind of just disrespected it. So I really like this inverse fair value gap because it was up here around the lunchtime high, which is the better entry. Sometimes you can get it above the lunchtime high, or sometimes you can get it below the lunchtime low. But anyways, I marked out this inverse fair value gap. I would have gotten in at full right here, but then I also seen that we created a fair value gap right under it. So I would enter half half position right here and then wait for full position right here. Um, but as we can see, I would have position right here, then we ran, and I did not trim at all through this run. I never trim during this strategy. I always wait until opposing liquidity. That's how I like to trade. Some people, trim, yada yada yada. Um, but then we ended up coming. Dude, what are you doing? Anyways, we ended up coming up back to this first inverse fair value gap. So right here, I would be in full. This right here. On this candle, I would have gotten in full. And I put my stop loss at the top of like the first initial push through the lunchtime high or lunchtime low is where I would put my stop loss. So I'll just mark this out. I would be in full right here. I'd put my stop loss right there, and I would look for opposing liquidity, which would be down here. So this is what I would be looking for. And as we can see, we came back up. We didn't take it out. We was close. And then we came back down and then pushed up and I got stopped out right here. And this was at 3:10 and news was at 4:30. So we were getting very close to news. And this is really good because this is how I would trade it every other day. Like if there wasn't news, this is exactly how I'd trade it. And obviously I got stopped out, so I wouldn't even be mad about that because it's part of the strategy. You lose, it happens. But yeah, so I got stopped out right here. And then we ended up coming back down a little more in profit, which is totally fine. And then we just blew straight through where I got stopped out at. So maybe I was like, okay, I want to hold this. And I didn't get stopped out. I didn't go by my strategy. I didn't go by my rules. And let's say I was like, okay, cool, I'm gonna hold it because I think news is gonna bring us down. Well, then I really would have been fucked. So I'm glad I went by my strategy and went by my rules, which is a very big thing, trying to get better with consistency. Um, so yeah, that happened, and then we ended up just going crazy. So I'm glad that I did not hold this. Even though it was paper trading, it's good to not get bad habits just because, you know, you're paper trading. But I was really excited to see how this would play out because like I said, I've never traded this strategy with news around this time. So I was really glad I got to see how this played out. And obviously it did I would have gotten stopped out. But I really did get some good information. I think this was a great trade. I went by my rules. I God damn it. Anyways, yeah, I went by my rules and I got stopped out. It is what it is. Anything else I need to? I mean, yeah, that's pretty much it. On this trade right here.
H, can I ask you a question?
Yeah, sure.
So in that, when you entered the trade there, right, you said you went like a partial and then you would expect a little bit more of a retracement to the upside there to end like a full, right?
Yeah.
When then you start to drive down and so on and so forth. When you see that, I know it's on the 1 minute, but when you see that break of structure to the upside, you know, where's the 245, a little bit before 245, if you can go down. Yeah,
Here.
yeah. So when you
All right,
break
here.
this one here, have you ever tried to kind of take partial profits there, or your strategy is really to drive all the way down to the minimum of what you call like lunchtime or
The lunchtime low, sell side
yeah.
liquidity, whatever you want to call it.
Yeah.
Yeah, I mean, I would not take partial right here because
Mhm.
I'm strictly going for liquidity. So I'm mainly focusing on liquidity being swept. So I would have not taken a partial right here.
Gotcha. All
Go
right.
ahead and sorry to interrupt, but go ahead and show him one of your back tests just so they can see exactly what you mean. So like H does not like to trim whatsoever. He strictly says buy side liquidity gets rated, gets hunted, so he looks for the rate at sell side liquidity, right? So and that's exactly how he has back tested this strategy here. He has a specific time zone when he enters. He has a specific time when he's looking for the setup to happen. So just watch how he does his back testing so you guys can see. And look what he looks for exactly. And there's a reason why he doesn't trim.
Yeah, this was Monday. So this was yesterday's trade that I took. Um, I fucked this damn thing up. I don't really know exactly where I entered because I just moved it. But anyways, as you can see, I marked out my time zone that I was looking for from 12 to 1, and we had our high that I marked out, and we had our low that I marked out. And as we can see, we barely nicked it right here. So I was looking for buys just off of this little nick, but I was planning on I think it was like a little bit. That was right here. Yeah, so we barely nicked this, and I definitely wanted to see it dig more into this low right here, which we ended up getting, but it was a bigger dig than I would have liked. But so I like I said, I put my stop loss at the lowest point of, as you can see, if it dug in it, I would put my stop loss down here. And if we went through the high, I would put my stop loss up here. But is why I didn't put my stop loss right here is because I was looking for that to the lunchtime low, which we had right here. So I got in partial right off of this inverse fair value gap. And then I seen we come up and we didn't really create a bullish fair value gap, which is what I'm looking for. So I ended up just taking my full position at the low. So it brought my average down to like right around here, I think. Yeah, right around here. And then we had that dig in, and then I put my stop loss down here because it's that dig that I wanted. And then we came back up. See, some people would have, taken partial right here, whatever you want to do. I don't do that. So I waited, we came back down, and then right after we came back down again, we shot all the way up for a 187 take profit, and this is where I got out at full, this opposing liquidity. So this is how a winning trade would normally play out. I don't partial at all. I just wait for liquidity to get swept, the opposing liquidity.
Great. Thanks, man.
Of course.
But and this is something that H and I were talking about earlier, it's like I personally trim every 50 ticks and he does not, right? So he was up today, I believe, on that paper trade, about 200 something ticks. With 200 something ticks, it doesn't matter how many contracts you have, even if it's one mini, you're up over $1,000 already, right? But his rules consist of holding from one section to another, and that's the way he plays. So that's the way he's respecting his rules. So he'll rather take the loss than taking the grand right there, right? Because that's the way that the strategy works. So based on his back testing, he's noticed that consistently there's always gonna go back from one sell side liquidity to the buy side liquidity, or from buy side liquidity to sell side liquidity. So he knows that this strategy works. So there's no point of taking partials when you know that he is going to take some losses, but the time he wins, it'll make up for those losses. So that's something that we as traders have to work on, and being able to hold to where we actually are targeting, to our actual TP target. Because a lot of us normally go in heavy, we go in more than we're supposed to. As soon as we're green, we get out, and next thing you know, it actually hit a target, but it hit a target without us. So that's one of the things that we like suffer in, right? So that's just something for you guys to like keep in mind.
And I can add on to this, sorry. But look, as we can see, I waited. I got my full TP right here, opposing liquidity. Right here, we never swept the low or high, so I didn't trade this. Then over here, we swept my liquidity, full TP at opposing liquidity, so it took it again. Then right here, we swept liquidity, looked for opposing, it took it out. Right here, we swept the low, looking for opposing liquidity, it got taken out. So I've noticed that also right here, swept liquidity, taken out. See, it's reoccurring. And I've noticed that from back testing, forward testing, all this other stuff. And I've noticed that. So why, if I see something that is reoccurring, why would I take a partial, right? That's just, I don't see the point in taking a partial when it's reoccurring. So it happens a lot. So that's one of the reasons why I never take partials and I just hold to opposing liquidity. And if I get stopped out, it happens. Like 3 win, 4 win. Like it's very consistent. Let's see. Win right there, win right there, win right there, win right there. See, as you can see, it's very consistent. So one little trade, one little loss to maybe win 4. I mean, that's pretty good. And like it's not little wins. Like this is 187 ticks.
You probably could lose like half of your position or 50%, and because of you let it run, you would make up way more than will make up for your losses, right?
That is correct.
Yeah.
Yeah, no, that's great.
So yeah, that's mostly, or that's actually what I've been looking for the past couple of weeks is what I've been trading.
Yep. But good stuff today, dude. I really wanted you to show this today because we actually were live at the same time, and he was actually looking at ES and NQ, which he actually never does. He normally focuses on NQ. So I think today was a really good experience for you to like watch both charts, see exactly what's going on with them, see how ES actually chopped while we waited for NQ to reach buy side liquidity throughout that whole time. And that is something that it was very new to H today. And the reason why I told him to just keep an eye on it at the same time, even though he was trading already, was because I personally, based on my strategy, I use ES as a confluence when I enter NQ or vice versa. So I think that's something very important to keep an eye on.
Yeah, that was here, I can actually show it. So at the same time, dude, what am I even looking at? What even is it? Why am I on the daily?
Win loss, win loss.
Anywho, so yeah, this is today. I was like Dubster said, I was trading this ES at the same time because I was paper trading, so I was just seeing how the divergence was in the market. And right around like I got in like I don't know, maybe an hour earlier on ES. It was kind of crazy. Like we were all the way uh down like on NQ we were about right here, and as you can see on ES we already swept it. So it was very cool to see how these two worked together. I wouldn't really say together, but how they move kind of the same. And we were just chopping on ES, waiting for NQ to grab that liquidity. And like I think we were at like break even for like 15 minutes just waiting for NQ to come back up. So that was something I learned today as well. I don't really like trading or looking at both of them really because it kind of makes me have different thoughts. Like considering ES took out liquidity already and on the NQ we're like all the way down here. It kind of messed with my head a little bit. But it is something that I could start doing, but honestly I don't think I'm gonna continue really. I'm just gonna keep on in Q because this is mostly where I trade it, or this is the only place I trade it. Yeah, I think I'm just gonna stick to NQ and not really look at ES and let ES do its thing, and then I'll just focus strictly on NQ and on my strategy.
Oh yeah.
Very nice, very nice. So, as y'all can see, the lunchtime macro is ridiculously consistent. But what H has walked through has pretty much shown y'all is this is what it is to learn to be consistent. You know, not just putting on trades. It's going back and looking at the trades you would have taken and being honest about it. Like, oh, what would I have been stopped out? Yep. Okay, cool. Would I have trimmed? Maybe not. And H was very honest about that, saying, I'm not trimming. I'm gonna, if I get stopped, I get stopped. But the level of trust he has in the strategy is exactly the trust you need to have in yours. Because that is what it takes to hold trades. Even when it chops. And it could go up, down, it could be green, red, green, red, green, red. But holding it and then allowing it to reach your target, that is where the consistency is going to take off.
Yep. And actually, I went ahead and I took 2 losses today, and you guys will see that if I would have actually hold and not trim, I would have actually been profitable rather than taking one break even hit. And then I also, one of my losses was a misplacement on, well, not a misplacement, but we'll go ahead and talk about that right now in a bit. But I think it's really important to just trust your strategy and hold to your TP. If it has not hit and it goes against you, it's okay. Sometimes we just gotta let that happen. It still needs to grab whatever liquidity that's left before it takes off, right? So I think that's something very important. And your strategies of your back testing should revolve based on those rules. So if you back test it and you notice that this strategy consists of price action going back to your break even, your entry point, then maybe wait and then enter after the second dip. Or if you do enter, just have in mind that, hey, like this fucker normally comes back to my break even point. I'm just gonna put my stop loss and I'm not gonna move it until it moves, let's say, 100 ticks away from me. Then that may be something different that you guys can do, right? So that's just something that you will only find from back testing and forward testing that specific strategy over and over.
Yeah, and one thing I really struggled with before I started back testing this specific strategy and trading this strategy is I would trim like this. My mental would be like, okay, we had this 140 tick dip. I would take out right here and then end up coming back up to break even, stopping me out, and then running. Or maybe I got out too early and it just kept running. So that's one thing I struggled with a lot. I would let my emotions get to me and I would get out way too early and I was missing out on crazy number of ticks. So I'm glad that I found this strategy that I see is consistent and I hold. I don't let my emotions get to me. I just let the chart do its thing and if it prints, it does. And if it loses, it loses. So what? There's way more days that you can trade. Um, so that's kind of what I'm glad I learned from this strategy as well is just holding. Like just if you have a good strategy, as we can see, it's very consistent. So if you have that good strategy, just be confident in it and let it do its thing. Don't let your emotions get to you. Just let the trade go through. And that's one thing I have learned as well.
So it's funny you said because that was something that I struggled with a lot when I first started. I was a professional scalper. There was nothing I would not scalp. Holding past 30 ticks? No. No. No shots. You didn't see that come from me? Hell no. You saw a bunch of 20 ticks, a bunch of 25 ticks. Beyond that, I was shitting a brick.
Oh yeah.
But there were quite a few things that were wrong with that. I was over leveraged. I didn't have a well positioned stop loss. And it was not sustainable. So when that happens, you kind of got to look at your trading and say, what the fuck am I doing? Right? And then so when you first start out, the number of ticks might be daunting, but have a clear defined target and go in with less leverage. Like if you think, oh yeah, I'm gonna hop in with minis, no, don't. I promise you, been there, done that, learned that. and had to pay the price for learning to trade starting with minis. Eventually, it'll pay off. Like this time, it finally is paying off. But to get to that point was unnecessary. So take it slow, trust your strategy. That is the point of backtesting, and that is what H is showing here. He has implicit trust in his strategy. So fantastic trade. You know what? Even if you didn't take it because you're waiting for your funded account, still an awesome trade. The mechanics are there for you to be successful.
So is AJ's turn now?
AJ,
Hand it off to AJ.
AJ, let's see it.
I don't think he's here.
And what? He's
Okay.
just here.
Nope. All right, I'll go next. Or Jay, you want to talk about your stuff?
Yeah.
I'm not at my computer, so I can't really show anything.
Oh, okay.
It's okay.
It's all
Yeah.
good, buddy.
Sorry, guys.
I'll go ahead and talk about my entry today.
All right, let's see it.
All right, let me know when. So I've actually I've been working a little bit on my setups. Are you guys able to see this guy right here?
Yes, we can.
Okay, so on this specific area right here, we currently have a bull run, right? So we kind of have this trend to the upside, so we know that we are currently on the uptrend. When price action comes back down and breaks this low, we know that this is a market structure shift, right? So we can either see market come down like this, try to go back up, failure to break the highs, comes back down, failures to break the lows, comes back up, and then it breaks, right? So that's considered a market structure shift for me. At least that's what I look for. In this case, I just drew the drawing this specific way. But we know that there's been a lot of times where I'm trying to enter these short positions and I'm live on call and then I have my limit order set, right? And I've noticed over and over and over that when price action normally does a break of structure and comes back down and leaves a fair value gap here, and price action has the internal highs, internal lows, and then it starts to swing, it normally does like a buy side internal swing, and then it comes into this breaker, this low here, this candle's wick low, and it rechecks from here, and then it takes off, right? So that's something that I have noticed a lot, and I can actually show you guys. We're actually at this very specific area where it came down. Jesus Christ. Came into this guy, pretty much almost rejected from here and then took off, right? However, I always like taking consequent encroachments. I never get wigged and then I miss them. And little details like these are the ones that I've been trying to figure out, why is it that price action didn't make it to this consequent encroachment and just came down and died from here and left this guy ignored, right? It just ignored it, never even came back to it, and it comes back to it later on. But this does not discourage me. I always look for either 3 dumps, and if we're in the second one, I will still enter on the third one. If we're on the third one, there's another one, I will not take that dump. It's just a higher risk at that point. And at the same time, we're always paying attention to what's going on the left side of the charts, meaning if we're already at sell side liquidity, I am definitely not going to want to take another dump at that point because there's a higher chance for this to now do a market structure shift for the upside, right? On this picture right here, however, we have a market structure shift. We currently on the upside trend, come back down, we do a market structure shift. We instantly come down, almost break the structure, went back up, grabbed the fair value gap. At this point, we entered a consequent encroachment and continue to break a structure. So these are the setups that I've been taking. This is exactly what I've been looking. If consequent encroachment does not hit, I do not enter, right? Simple as that. It's easy. Other than that, I miss a trade and I'm not in there. So I just want to throw that out there. This is exactly what I'm currently working. I'm studying this over and over. So I'm back testing it at the moment. So I've been seeing it already a couple of times. So I'm just trying to see out of how many days I back test, how many internal highs, internal lows we have, and it rejects off of this candle rather than going to consequent encroachment. That way we don't manipulate our stops and have to pretty much tweak it a bit and have bigger stops. That's something that I'm not trying to do, right? So I just want to throw it out there for you guys. Other than that, let's go ahead and focus about trades today. Let's go ahead and I actually took 3 trades. And I got stopped out in one of them. And then one of them I got stopped out at break even. So I actually took 4, but in reality, I was showing Lima something at the time. So I got out of my TradeAway account and I was in paper.
Sorry, my friend. I made you lose a bunch of money.
So
there.
I entered here and I did not notice I was in paper. It was funny. This was before or during New York Open. So I actually entered with like 3 micros. So it's not a big deal. Either way, it wouldn't be a big deal. But I took this trade here. It was just on paper. The reason why I liked it was because, as you guys can see, we were on pre-market lows. We grabbed sell side liquidity here, went back up, came down. We failed to make a new lower low. At this point, knowing that we broke structure to the upside from these internals, we know that we're currently on an uptrend. When it came back down here and we opened, we noticed that at 9:30, we took off again and we failed to break the lows. At that point, you know that if we have a failure to break the lows, there's a higher chance for it to continue and grab buy side liquidity, pre-market highs. So the risk here is well worth it. The risk to reward is well worth it. So you enter consequent encroachment off of this bullish fair value gap, and then we continue to the upside. So this was one of the entries I took today. However, it was on a paper account. What do we do here next? If we miss this guy, let's say, for example, you were asleep, we know that we stay away from the market from 9:30 to 10 a.m., right? So from this candle to this candle right here. So from this area right here in this specific section, I do not trade and I stay away, right? Either way, I did enter here. But normally that's what we do. Let's say you did miss. What do we have here? We have a buy side liquidity. We have pre-market highs, but at the same time, we have a break of structure to the upside. This is also a buy side liquidity hit right here. So this is a break of structure as well. So we have a market structure shift here. What do we do? Candle closed above? Yes, it did. Did it close above the line? Yes, it did. Did we also leave a bullish fair value gap? Yes, we did. So confirmation here is consequent encroachment to the upside. However, let me go ahead and show you guys this. At this specific section, this is the exact same area. Right here, we broke structure to the upside. Did we close? Yes. Did we leave a fair value gap? Yes. So what do we enter? We enter a consequent encroachment, right? So the entry here is a consequent encroachment to the upside, and I really wanted this guy up here. So the reason why I entered on ES and I did not enter on NQ here was because my stop loss has to be all the way down here because that's the rule I follow. But I was not comfortable with 152 stop loss. That's insane, right? So I would have to adjust with 2 micros just to be able to afford 152 stop loss tick. So at that point, even though I did have the confluence here, I went ahead and I took it on ES. I was comfortable taking a 27 tick stop loss, then taking 159. So I went ahead, entered that on ES here. My target was this break of structure right here. I was not paying attention. So what I do is I normally put my TP at consequent encroachment. So I put my TP somewhere around here. I ended up getting partials here. As soon as partial hits, I was looking at gold. I went ahead and I moved my stop loss to break even. Next thing, what do we do? As soon as we hit my first partials, we come down and I get wicked out instantly. So this is something that we were talking about earlier with H. Like he holds until his full target gets hit. I don't know much about ES, so I normally just trim at the first hit. I don't have a set trimmer, so I took my partials here, moved my stop loss to break even, and unfortunately it wicked me out, and I ended up losing this full profit here, right? So that is just something to keep in mind. This is a strategy that I do. I do take partials, and as soon as I do take partials, I move my stop loss to break even. So that's just the way I specifically went ahead and did my rules, right? So this was a winning trade. However, I did get stopped out of break even, so it wasn't. So we took this paper one, consequent encroachment. We took another one, a consequent encroachment for continuation to the upside, grabbing more buy side liquidity. Now, a very important section here, we're going to go ahead and talk about NQ. At this specific area here, 2 different scenarios happen, and this is crazy. So I follow my rules. Fair value gap here, entry consequent encroachment, a couple ticks above the fair value gaps candle, right? That's my stop loss. That's exactly my rules. So that's how I follow. So I actually follow this rule, right? Going down here, this red line was my stop loss. However, this is only 28 tick stop loss. I'm okay losing 50 ticks. So maybe I should have done this 50 tick stop loss and that would have been fabulous, right? I never did it. I went ahead, I kept to my rules. It never hit my mind that I could have just raised it up a bit just to be on the bigger safe side. And I never did. So meaning that We're gonna go ahead and change this line to green so you guys can see the difference. Stop loss on top. This guy's a red. Right here on this specific area right here, I ended up getting stopped out, and I got stopped out due to following my rules, which I'm not upset about because obviously you have to stay true to my rules. But in this case, maybe I should have been comfortable enough to put a 50 tick stop loss, right? This is exactly what I normally look for a 50 tick stop loss, but this is just a very good experience for me today. I did get stopped out. However, the analysis was correct. As you guys can see, it took off and never came back up. So that right there was just perfect. And something very important here, I never got the chance to actually enter back again. And I pretty much didn't really enter here on NQ. Reason why, let's say, for example, you missed this drop, you were looking for the market structure shift. This guy right here is your low, right? Based on the rules that I follow, if this low breaks structure to the downside and the candle that breaks the low makes the market structure shift close below this line and leaves a fair value gap, I enter at consequent encroachment, right? That's my rule. That's what I follow. However, as you guys can see, this yellow candle did not break this low. So there was no need for me to enter here. Was it profitable? Yes, it was, but I did not enter due to that. This guy right here was a perfect position due to the fact that it was just a very small tick, 97 tick, and I would have gone for the break of structure here for 173 ticks profits. Risk to reward ratio.
Sure.
I did not take it due to the fact that I simply didn't follow my rules. It didn't follow my structure. So at that point, I stayed away. Moving on to ES though, we have a very important scenario here. So we have a volume imbalance, we have the final fair value gap, and we have a volume imbalance. What did I do here? Due to the fact that I did not play only off the fair value gap here, but I played off the volume imbalance and this guy down here, I went ahead and I took a position here. I took a position here, and I took a position here. So I hedged against myself, knowing that price action most likely will not reject a consequent encroachment, will probably not reject off of this guy, and would want this guy at the very end. So due to the fact that I wasn't heavy and I did hedge against myself, I allowed myself a liquidity hit. So at this point, I allowed myself my stop loss to be at the consequent encroachment here. These were my entries, so my average ended up being somewhere around here, right? So that's exactly how I played. As you guys can see, by the time my average was like somewhere around this specific area due to this hedging against myself, my stop loss did not get hit. It was a 16 tick stop loss from my average. I was okay with that. And as you guys can see, we took massive hits. I took partials at this fair value gap here. I went ahead and took partials at the consequent encroachment off of this liquidity here. And we ended up running massively with a 55 tick win here. So in the end of the day, I did lose here on this specific trade on NQ, which was up here. I took a loss here. I went in with 2 minis, so I did take a hit here for 500 bucks. But due to the fact that that stop loss was very small, with this guy right here, I was able to recover the losses and make extra cash. So in the end of the day, I ended up green for the day. But based on today, I got stopped out break even, followed the rule here. Different. I followed the exact rules I do play based on the liquidity hits and the volume imbalances. So this was okay. I did take a loss, but I took a loss due to the fact that I follow my rule based on the stop loss. Should I move to 50 ticks next time? I most likely am going to do it next time. Other than that, stick to the rules and pretty much follow, right? One more important thing, we talked about how there was a break of structure on the other side right here. On this specific section here, as you guys can see, we have a line here. Candle came down, did not break the lows, did not close. I mean, it broke the lows, but did not close below this break of structure here. We did have a market structure shift, but we also left a fair value gap. There was no reason for me to enter here. There was an inverse fair value gaps here, but I did not enter. So that's just something here that I did not enter due to the fact that my rules did not get hit, did not get met. And at that point, I stayed away from the market. And then from there, we started just figuring out what happened here with the lunch macro. But those were the entries I had for today. You guys have any questions? Questions, concerns?
No, I actually think this is awesome. I like how you're getting more familiar with ES. It is nice that you know, you're looking at both NQ and ES for Confluence, but you're absolutely right. You know, you're taking it slow. You're really trying to get your bearings before you go balls deep in ES, since it per ticket is much more expensive. So
Yeah.
good on you for that.
Thank you. Thank you.
So, but these are awesome trades, man. Look, I got nothing bad to say about it. You know, so your stop loss on that second trade, you know, when you held and it took out and you took profit, then it came down and whipped you out. Real quick on that fair value gap. So what made you think that this was going to continue lower looking at the bodies?
This guy right here.
Yeah, so if you look at the bodies of all those candles, to the right of the BISI. So you see that the 5 candles or 6 candles.
This guy right here.
Nope. One to the left, far left. Right there. Yep. Look up at the next 5, 6 candles.
1, 2, 3, 4, 5, 6. What made you think that this was gonna come down?
Like
what made
break
me think?
all the way through.
Oh, to the downside.
Mm-hmm.
Well, I have no idea.
But you said that had stopped you out.
Oh, it stopped me out because I took partials here, so I instantly moved my stop loss to break even. That's just my rule.
Got it.
Whenever I take my trim, I instantly move my stop loss to break even, risk free. I made some cash, and that's it. So that's the reason why I got stopped out. But if I would have just, let's say, for example, if I never took profit, let's say I wanted my profit up here and it never cashed me out here, then this rate, because it would have gone against me, my stop loss would have never moved, and my partial would have never been taken. So my rule is, if I trim, I automatically move my stop loss to break even. That's the only reason why I moved it.
Okay. That makes sense.
Yep.
But no, man, look, like this is well thought, well said, well executed. I got nothing on this, man. Like this is awesome. Like this is,
yeah.
you know, a prime example of 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 what you're supposed to be doing.
Yeah, it was overall a good day. Good learning experience, tell you that much.
Oh yeah.
yeah.
Oh yeah. Today taught a lot of people lessons.
Yep. All right, let's go ahead and pass you on with the share.
All
I
right.
crashed.
Tommy, welcome. Did you by chance trade today? No trades today. No worries. All right, I'll go ahead and get cracking on this. All right, so this is an oil trade that I was in. Okay, yeah, we're gonna close that out. Awesome. So that was a paper trade. Let's go ahead and go into today. So today I was in the office, did not really get a chance to do a lot of trading, but I jumped into live early and took a quick bump right up here. Saw that we had retraced down, came down just into this wick right here. This was a nice liquidation, came down to consequent encroachment and not breaking lows. So if you really look at the candles all the way down here, we're not breaking lows. We created a low early during London, came up and had the retracement. This is the retracement that we had been looking for. Okay. We were expecting a lot more liquidity to be taken today, but it is going to be taken after hours. So, totally cool with it. Let's keep it on moving. All right. So, in that instance, we took a trade up here, and I went in with 3 minis, let it go, called it a day, and really just wanted. Then I got to the office, had some time, got into some more trades. So yeah, we got into some more trades. So around here, I got into another. I took the downside here with 6 minis. Came down to consequent encroachment. Yep. So we had this was by far the largest play for me today. This netted around 5,000, but today was the day that I had gone into the market, taken a few trades, and bounced. And just bounced. So, with that being said, it was good for me to not take a lot of trades since I couldn't really monitor them. But I had also spoken about the lunch macro starting in the Discord. And it was right when we wicked down here, taking out this liquidity to the bottom. I let everyone know, hey, lunch macro is starting. Right? So first candle at noon, which would actually be this candle all the way down here. Noon. Here we go. So we create a low here, then we took it out, but we liquidated, right? We went for the sell side, then it was time to go to the buy side. So I got in here. Rode this up here, and my stop loss was very, very tight. Now, why did I keep my stop loss tight? Because I was in deep with 6 minis. And after that trade, kind of took things off for a while. I said, all right, you know what? Time to get back to work, time to do some stuff and relax. But here's something I had also noticed. So normally during the lunch macro, as H explained, you're supposed to take out intermediate highs. That's supposed to happen. That did not happen. So because we did not do so, we chopped to the end of the day. We see the last few minutes run straight. We had this huge run. So understanding that we needed to take out additional liquidity, I was targeting actually the consequent encroachment of the 1 hour for value gap. Here, I took one trade here, and we called it a day. Went in with 3 minis, called it a day. So those were my trades of today. I had also taken calls during the lunch macro, and we banked on that. Those went for 200%. So with that being said, these entries, while they may not look precise, okay, while they may not look precise, they are relatively, actually, they are well placed. So I actually don't make entries off the 1 minute. My entries come off the 5 minute. So we see the failure to go higher up here, creating equal highs, which means price is going to come back, which it has. And it came back and smacked the shit out of it. But because we had such a strong buy side delivery up here, I expected a strong sell side. Plus, we had a volume imbalance here. So this was where I would take my first trim. Right hit the volume imbalance. I was targeting consequent encroachment, and that is where I let the play finish off. But because we had the failure to go higher, I got in, tried to get in right above here as much as I could, but this thing took off dramatically. Oh, hey, we took profit. Nice. But here, why did I enter in here? Because we broke the sell side, right? Still during lunchtime, broke the sell side. So we knew that this was the beginning and where we are going to really start that reversal and that continuation. So we saw it grab some sell side, but here it liquidated. We are looking for the liquidation to begin the actual trend back in the direction of price action or of the morning. So that was our entry here. My entry here, merely because we needed to begin to break highs. So seeing as we needed a correction, it allowed for more to go. All right. Now, those were my trades today. My stop losses when I'm trading 6 minis is relatively short. I normally trade the 50 tick, 40 tick stop loss. This is about 15, 20 ticks because 15 to 20 ticks, that's still a pretty sizable loss. But at the end of the day, I do expect price to return back to the liquidity void all the way up here. So we still got about another 40, 50 ticks or bars to go. So I'm curious to see when and if that happens during London or if that's going to happen before London. But it's kind of summed this up. Overall, today was a good day. I enjoyed it. Definitely am glad about the profits taken. So
Go ahead and sorry to interrupt, dude, but go ahead and go back to that first trade he took.
yep,
The one on
like
top.
that.
No, sorry,
Yeah,
the one on
up
top.
here.
Yeah. So as you guys know, Quantastic and I trade pretty much similar, right? I look for different setups. However, I enter based off of median, right? So I entered that position technically at the consequent encroachment off of that CB over there on the left side, right? But that's the way I play. And the things that I should maybe talk about at times or look into is the fact that if I know that I want price action to reject a consequent encroachment, I ask myself something. Why don't you just wait to see a candle actually show you that it wants to reject?
Mm-hmm.
These hits when you're not supposed to, right? And I've tried it, and it's been a big ass mess where price action just takes off, and at the end of the day, I FOMO into it, and then it rejects back up to the retracement to the top. I get waked out, and it still goes my direction. So at the end of the day, I can care less about reading candles. I do not care about them. I enter limit order, I set my stop loss, and I can walk away and go drop all my kids at school, right? That's normally what you guys will see me do. So that's just something very awesome to see that even though I entered there at the top, I got stopped out. Quantastic ended up entering pretty much in the same area and ended up being profitable. So I thought that's pretty cool, you know?
Yeah,
That's
this one,
funny.
I was actually at my desk working and I placed the trade and I was like, all right, I know we're gonna get retracement back up with me, and I'm like, yeah. And I just looked down at my phone, I'm like, I think it can keep going. And then what I saw was this volume imbalance. So there's a very good reason why my chart is very bare. So I can see things like this volume imbalance down here. You then have a nice fair value gap down here that also got swiped, absolutely just swiped down here. Then we still have some liquidity to the downside here, but again, I'm mainly targeting. I wanted to target this volume imbalance and then the consequent encroachment, just so that we had enough. Okay. So that is why I got in, and Dubster's right. You know what? we look at the exact same area and see very different things, but end up taking the same place.
I like it. All right, let's see.
Right. Yeah, if you have any questions, please feel free to ask.
Yeah, so we have with H going on with the lunge macro. I mean, I trade pretty much on market structure shift and the final inverse for value gaps. So I trade a lot with that strategy. I mean, Quantastic has pretty much all the models. So if you guys have any questions about a specific strategy, entry, or anything like that, I mean, we can go ahead and help you guys try to figure it out with you guys.
Yeah. And look, yeah. So, Tommy, here is the thing. When you start looking at ICT, the ICT mentorship, you're going to find all these videos of people saying, I've simplified it, I've condensed it. Don't watch those. Because they're leaving out the key information. Right? So, take the time to actually watch the actual ICT mentorship, and it'll do you so much more. I know ICT goes on a ton of rants, but you're going to find a lot of useful information in those rants.
Yeah, I recommend you start watching the ICT Mentorship 2022 and you start from episode 2.
Yep. Then I would recommend going to 2023 and then take your ass back to the 2016. Month 4. All right. Are there any other questions, comments, concerns?
Nope, I think we're good.
All right. Since we had a huge conference last night, we're going to keep this one relatively short. But guys, I appreciate y'all joining tonight. It has been a pleasure. And as always, for those of you watching, please give us your comments, questions, concerns, and we'd be happy to address them. And welcome to the Futures Initiative. All right, guys. I will catch y'all later.
Yep, deuces.
Thanks, guys.